Okay, good morning, traders. Trust we all are doing good. So, welcome to I'm Currency Geek. So, welcome to the day five. Oh, I mean day six. Wow, I lost count. Okay, I mean day six video for my 100 days of technical analysis challenge. So, today US oil, which is WTI, caught my interest, and I'll be diving into it right away. So, looking at the weekly time frame, um, I can see a W pattern formation which has actually formed, and I'm sure most traders or every traders should know the rules of M and W pattern, and I've been talking about them quite well since the beginning of my 100 days of technical analysis challenge, where I said if we have a W pattern, it must come back to do a retest at the neckline before price projects upward or to the direction it's moving, while an M pattern would move the same way but just inversely based on direction. So with that known and that said, now um this W pattern I see actually gives me a tendency that price or a nugget that price would actually short back to the net line. So what would I do? I would actually go to my line chart or switch to my line chart to be precise and use my ray to mark out the tip of the net line so I know where to use as my target. So I'll just do this neckline slash target. Brilliant. Okay, so now knowing that this is my neckline and it's also my target for US oil sell, if I gather more confluences that would actually warrant a sell on it. So to the other thing I do is I say something. I look left to get right. So what does looking left to get right actually means to me? It helps me understand how price has left a trail to what it will do in the future. Now, looking left around this area, I can see an area of structure here, an area of strong rejection to be precise. So I can actually pick out my ray to horizontal ray to and mark out this area of structure here nicely. And now I've marked it out and I can actually tag it as sell zone. Yes. So um knowing that this is a sales one, I now go down to the daily time frame where I love to gather most of my confluences together to go on a before I know the direction where price will be heading to. Now on the daily time frame, I just have to zoom out a little to see how price reacted. Now we can see we had a reversal pattern here, which is an engulfing candle pattern, and we can see it acted as support around this area before a break occurred. Now I can just pick my box to and mark out this structure here, drag it into price further. um yes, now we've actually been able to identify where price might or will be heading to. So we know that there are two things involved. Is either price can just shoot down without getting to this level, or price actually moves higher and get to this level before shooting down. Now to the next thing I would actually want to look at, if you've been following my analysis from day one, you'd see I always add my RSI to the chart. Now adding my RSI to this chart, I look for oversold and overbought levels on the daily time frame. Now, on daily time frame, we have a overbought on the daily time frame. Now, this signifies a huge tendency that price might actually drop down further, but I still need to gather more confluences before I can actually say this is exactly what price will be doing or might be doing on the daily time frame. Now, knowing that price is overbought on the daily time frame, this gives us just confluence for that confluence. Now, I go to the 4 hour time frame and I still look for more confluences. Now, on the 4 hour time frame, um I can literally see price is still moving in an uptrend, creating series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Now, I would love to add my RSI back to the chart because there will be a possible divergence on this time frame, and yes, we have a possible divergence on this time frame. Um, okay, brilliant. Now we have a possible divergence on this time frame, a bearish divergence to be precise. So we have a bearish divergence on this time frame where it also signifies a short. When it comes to divergences, when a bearish divergence is formed, it signifies there's a tendency for price to dip down further. Now, there's something I want. Someone asked me in my inbox. He said, "How do I look at the chart and know that there would be a divergence occurring?" Now, it's very simple and easy once you put your mind to it. Um, Once I find out that price is oversold or overbought, due to my series of backtesting most of the currency pairs I trade, I've realized that when this pattern prints out on a daily time frame, that's an overbought and an oversold, there is a huge tendency that there will be a divergence on the 4 hour time frame. So series of backtesting has actually proved that to me, so I know what to look out for when I find oversold and overbought regions on the daily time frame. So I hope you learned something from that. Now back to the analysis. This is the major area of structure here on the 4 hour time frame. This area right here is a major area of structure. Yeah, I'm trying to mark this out properly. Okay, yes, so this is a major area of structure on the 4 hour time frame, and price, when it dipped down, it never broke below this area of structure. So this signifies that there is a possible tendency that price will still push higher to the upside. Now to the 1 hour time frame, which is the last time frame I always check whenever I'm doing my analysis. um okay, let's mark this out properly, and let's just take off our RSI from the chart and drop this right here. So there is a possible H and S formation. That's an inverted head and shoulder formation in this scenario. So, inverted head and shoulder. Let's mark it out, and we know where we'll be heading to next. So, there's a possible inverted head and shoulder pattern. Um, the possible, because that's the last week, and Shrimp price higher. Yes. So there's a possible inverted head and shoulder pattern. Yeah. So most persons will say this is not a head and shoulder, it's not picture perfect. I want to call everybody attention to this. Um chart patterns doesn't need to be picture perfect the way you see it in textbook. It will never be picture perfect the way you find it in textbooks, because they don't just print out perfectly the way we want them to print out. And also, if we look at this closely, this looks like a corrective trend line or a counter trend line to price ACTL. So yes, brilliant. Now, this looks like a counter trend line whereby I expect price to reach here and possibly project upward, or price just moves upward based on the inverted head and shoulder, the possible inverted head and shoulder that might form. But still, if price moves downward and break this level, I'll look to short here, or if price still moves upward into the sell zone, I'll look to short here. So my bias, or I'm not interested in going long on oil, I'm interested in going short from my bias and sentiments all gathered together. I look to go short on US oil. So I just watch it short back to the net line. That's my bias. Short back to the net line, which is quite a good amount of pip and a good amount of R. So if you did learn something from this price analysis breakdown, please do leave a comment in the comment section down below, and a like and also a follow.